Hello and welcome to this month's Deal Clinic Live. We have Agent of the Month is Dean Parata of Parata Properties. We have our power team member as usual, Bruce Mannering of Bond Finance Limited. We also have Tim Sanders, who is one of our own investors, who is usually working with us as well. And today our special guest is Lachlan Main. Now, Lachlan actually was one of our investor mentees and went through our mentorship program that teaches overseas investors how to actually invest securely and safely in the UK market. Now, I'll be talking to Lachlan about his experience, but he's just finished a deal with actually Dean. Okay, so we'll be going through those today. So as I mentioned, please do feel free to drop in your questions into the chat box and the Q&A, and I'll keep my eyes on those for you. So, Lachlan, I would love to come to you first. Hi, how are you?
Going?
All good, thank you so much. So I just would love you to explain to the viewers watching actually how your experience was with the mentorship program that we originally did with you. My goodness, it was back in, was it 2019, 2020?
Yeah, I would guess 2020 would be my guess.
Yeah,
a little while ago now.
How was that for you?
It was really good. I feel like it was structured really well. I don't know if it's still the same format now, but we would have a monthly class, get some homework, and then we'd have, about 6 hours together that once a month. And it really worked out well because it kind of works with life, and it's not like, come on this weekend and lose your whole weekend and you're done kind of thing, go away. So it's really good to kind of pace it. We had Anthony, and he really cares. It really showed. And it's not just property, it's also in the negotiation and mindset and those kinds of things as well that really help out.
Yeah, they were really key aspects, weren't they? I think it was great to, as you mentioned, break it down into the modules and make it bite-sized so that you could consume it and then integrate it and then apply it, which you have done so very, very well. And you've worked with Dean and you've just completed a deal with Dean. How was that working with Dean on the platform?
Well, we haven't cracked a beer together yet, so I can complain about that. But besides that, no, he's been really good. Whenever I've got a question or anything like that, he'll get back to me really quickly. He doesn't really, what's the word, sugarcoat anything. He will tell you how it is and what's happened, and he hasn't had any mistakes with me, but he's said it many times before where if something goes wrong, I'm going to let you know, that kind of thing. And yeah, I won't spoil it, but we'll find out later. It's worked out pretty well.
That's amazing. That's amazing. And it's really important that you have an agent that is going to be completely upfront, honest and transparent with you. That's great that Dean, we know how Dean works and we're happy that you have the same experience. And do you think that going through the mentorship program helped you? Did you feel, did you feel more confident having been through that?
100%, yeah. As an example, Anthony's always there to answer a question if I need help. What else? There's also the extra support from SI as well. So that escrow system and all those kinds of things for, I wouldn't call them shady characters, but, people looking after themselves, that kind of thing.
Yeah.
It's been really good.
Brilliant. Okay, perfect. Yeah, it definitely helps give a little bit more security, a little bit more peace of mind, I would say. Not necessarily that they're shady, but I understand what you mean. It's just the peace of mind, really, that those systems help.
Peace of mind, yeah.
Perfect. Fantastic. Thank you so much, Lachlan. Really appreciate that. So without further ado, I'm going to introduce all of you to Dean Parata, as I said, of Parata Properties. He's one of our agents, and Dean's actually, Parata Properties is actually a UK-based project management and sourcing company as well. So they specialise in Greater Manchester and Liverpool, but they do operate in other areas of the UK. Various strategies. Dean's been with us since 2020, actually. Great yields, really affordable prices. And as you've just heard from Lachlan, he's very upfront and honest with his investors, with his clients, and will let them know from a transparency perspective of what's going on with the deal, and what he's prepared to do and how that's going to happen. So I'm just going to play a quick video bio of Dean's. Let's see how we can get on with this tech abilities.
Hey everyone, glad you could join. Thank you for being with us today. My name is Dean Parata. I am the founder and the director of Parata Property. Parata Property is a UK-based sourcing and project management company. We have two parts of the business. The first part is our sourcing side of the business. We source properties all over the UK, various strategies. We do HMOs, BRRs, buy-to-lets, commercial developments as well, all across the UK. The main area we source in is Manchester, Greater Manchester, Leeds, Liverpool, although we do also source in other areas across the UK as long as the deal is good. Now, that's the first part of our business. The second part of our business is our project management, which we call our hands-off service. So as you know yourself, a lot of your investors are busy, whether you live in overseas countries or you live in busy cities with important and busy jobs. You want to outsource the actual project management of your investment over to someone that you can trust and that you trust to take care of that in a way that is going to be hands-off. And that's what we do. So we look after absolutely everything from surveys, solicitors, planning if we need planning, architectural drawings, all the way through to the actual refurb and project management of the property if that needs to be done as well, and all the way through to tenancy so we can actually get tenants in that property. That's called our hands-off service, and we do that as well as a part of our business. Anyway, guys, I won't bore you too long with all the information about what we do. Here are some clips to show you actually what we do, and hopefully in the future we can work together. Welcome, guys, to another video. My name is Dean Parata, Parata Property, in partnership with Sam Oliver Estate Agencies. We've done another property in Manchester. This is my favourite room by far. This is a master bedroom. It's a master before we converted it to an HMO. It's still a master now. The exciting things about HMOs, as I said earlier, is you get 5 sets of rent. Granted, you do have to pay bills, but you're looking for these type of rooms budgeted around $430 per month. Conservative around classes. If you're looking at around 500 plus for a room of this size, the most rooms in the house actually.
Okay, perfect. So I would love to introduce you all now to Dean Parata of Parata Properties. Dean, over to you.
Thank you, Bonnie. Thank you for the kind words as well, Lockie. So I'll jump straight into the presentation, guys. We've already done a little bit of an intro clip, so I don't want to do it again and talk about me again, but we'll get through a little bit of what we do, how we operate as a company, and I guess the services that we can provide for you through the Sourcing Investments platform. So yeah, that's me. My name's Dean. If you can't tell by the accent, I'm Australian, as with Lockie. Been living in the UK now for a while. Love travel. I'm also a part-time rugby player, and we founded Parata Property a couple of years ago, over 2 years ago now, just to be the one-stop solution for overseas clients looking to purchase property in the UK. So our focus, guys, is the client. I know it's a cliche and a lot of companies say that, but we really do try and emphasize on being upfront, being honest, and, putting ourselves in the position of the client. And what that means is, we'd want to receive information as it comes. We want to receive everything and everything needed from the outset to make, a calculated investment decision. So we have a long track record of working with overseas clients, as I know that a lot of the students on the platform are based overseas. Our emphasis is long-term. We're not looking to make quick money. No, we're looking to build long-term relationships, not just do one deal, do 2, 3, 4, 5, help you build your portfolio to replace your income over the course of a number of years. We've done this is 22 now. So we've done 22 projects. We've currently got 7 underway as we speak that are due to wrap up quite soon. So we've got a proven track record of delivering projects, getting them done. And full transparency, again, with what we do, we try and be as honest as we can, as upfront as we can, in how our business works and in how we are going to tackle the deal. And on the next slide, so this is just a brief breakdown of what we do. So we source property, number one, source property throughout all of the UK. As Bonnie said earlier, our main areas, our hot areas that we like to call them, Manchester, Greater Manchester, and Liverpool and those surrounding areas. We have a strategy outline once we source a property, so what we want to do with it, what our best practice is. So we focus a lot on HMOs, although not all specifically HMOs. We do like to focus on them. I'll get onto the reasons why in a second. So we have that end goal strategy set in motion from the beginning. Then we also provide our hands-off service. So that's turnkey service for the entire project. Again, a lot of people attending this right now, and a lot of people on the Sourcing Investments platform are based overseas. So that's fine. We take care of everything from start to finish. That includes your surveys, your due diligence, ensuring that the property complies to regulations, the project management of the property, and ensuring that everything goes according to one, budget, and two, timeline. Then we have the handover of the actual property. So if it's a HMO, for example, we'll ensure that the property is compliant, it's licensed, it's furnished, and then we don't actually do tenants. We don't do tenancy, but we are partnered with some very trustworthy agents in the area. So when we do our handover to the lettings, you're in trusted, well-vetted hands, so that we can cover the full process for you. Why HMOs? So HMOs, I mean, I can talk about them all day. They are very exciting. And these are just a couple of the reasons why. One of the main ones is the demand for rooms in the UK. So the UK has a housing shortage, as you're probably well aware of, and HMOs are a really, really great solution to that problem. Essentially, you're taking one property that might house 2 or 3 people, you're turning into a property that can house 5 or 6. Commercial valuations as well. So HMOs, and Bruce will be able to talk about this a bit more in detail. HMOs, once they're done properly and they're done according to standards and to a high spec, they're no longer a residential property. They are now, a HMO. It's a cash flowing property, and they are valued differently. Capital appreciation, again, the increase based on that valuation will go up higher over the period of time, as opposed to a standard residential valuation. I don't want to get too technical, but essentially, if you've got a property that houses 5 people, that's going to be worth more money. Article 4 zoning as well. Don't want to bore you with licensing and things like that, but Article 4 zoning is a zoning that any council at any given time will put in place to say, hey, in this circle here, there's no more HMOs. And this is something that happens over time in different areas. It's just to stop that area being oversaturated with HMOs. The good news about Article 4 zoning is if you own a property within that circle, that property all of a sudden skyrockets in value overnight. So it's good to get in before that zoning takes place. Streamlined service, what we offer, we can deliver on providing the full service on HMOs. A lot of people get scared that there's legislation, that there's a lot of red tape, there's a lot of all these things that you need to do. There is in certain properties, and there are a lot of things that you need to be aware of, but we know all the bits and pieces. We know how to take care of all that from start to finish. And the last one is cash flow. So the cash flow on HMOs outstrips the cash flow on a standard buy-to-let every day of the year. And I will show you a little example here of one of the deals that we've done in the past. Now, Bonnie, we've got some questions here. Should I answer them as they've just been copied and pasted. No worries. I'll continue on. So this is an example of a standard HMO deal that we've done in the past. So I want to go through the numbers just so you can see exactly what we're talking about. And when we go into the deals in a little bit, you'll be able to see the numbers that we include in all of our deals, so you can see exactly what you're getting into. So you'll have a purchase price here. That's a negotiated purchase price that we'll work with. You have the stamp duty, that is a non-negotiable. Although if the property is in a terrible condition, you may not need to pay stamp duty. You have an overseas stamp duty, 2% if you're a non-UK resident. A refurbishment, so the refurbishment on a HMO is a bit more expensive than a buy-to-let because you're doing a full rip out and essentially, you're creating 5 additional spaces if it's a 5-bed, which is the case here. You then have, if you're purchasing via bridging, again, Bruce will be able to go into this more in details, but if you're purchasing finance, you'll have certain fees you have to pay there. And then you have solicitors fees, which you need, mortgage brokers fees, sourcing fees, and our hands-off service fee. Again, you need to do your due diligence, guys. You can't just breeze over that. So that includes home and structural surveys, and you need to get architectural drawings so that we can get into the property and get moving. Build control as well, so that we can ensure that the property has a build control certificate once works are done. Council fees and licensing for the HMO license, and then furniture. You want to furnish the property as well. So on a cash buy, you're looking at a total buy-in of 186,508. On a mortgage, 75% loan to value on just the purchase of the property, not putting the refurb in the mortgage there. You're looking at 120,448. They are expenses. Now, over here, we'll stay in this loan to value in this mortgage purchase column. So your end value, loosely based on all of that, is going to be 203,775. And again, this can be determined before you actually get in the deal, so you're not crossing your fingers. Your remortgage value, 152,831. So your total money left in the deal on this particular deal would be 331,616. So 33,616 after you have your refinance. So although you're spending a lot of money on the refurb, although your outgoing costs initially are quite high, based on your investment history, you will be refinancing that property and you will be drawing a lot of that money back out because your property is now no longer a 2-bedroom terrace property. It's now a 5-bedroom all ensuite HMO. It's worth a lot more money. So potential cash flow numbers, which is the juicy part that we want to look at. So you're looking at, on this particular property, 2,375. So that, just to get the exact number per room, 2,375 was 475 per room. So it's a 5-bedroom HMO, this one. So that's 475 per room, which is quite conservative for this area. So you're looking at over the course of 12 months, 28,500. Now, your interest rates, they have gone up. We're not going to lie. So we'll be honest, it's 5% at the moment. They're even higher than that. So depending on your criteria, whether you've got a footprint on the UK and whatnot, they may be higher than that, but we budgeted 5% here. They can go anywhere up to 6 to 6.75. So your mortgage payments are 7,642. And then your expenses as well. You need to cover certain expenses, such as council tax, licensing, utilities, etc. That's 5,000 per year. Your management, we budget at 10%. Your voids and maintenance, we budget at 10%. Your monthly profit, therefore, is going to be £845 after all expenses. And then your annual profit is just over 10K. So return on investment with everything in of 30%. Now, I'm talking real fast and there's a lot of numbers here, guys, but don't worry. Feel free to contact after, and I'm sure Bonnie will say this as well, so I can go over this in detail because I don't just want to be blurting everything out, but I am mindful of the time.
Dean, I just want to come in there very quickly whilst you're going through, because I want to be able to make sure you've got enough time to highlight both the deals. So I just think it's really important that you've just gone through that breakdown, because initially as an investor, especially if we're new to the environment, we may look at that refurb and think, my goodness, was 180 or 80,000 for the refurb, was it originally?
84.
Yeah, we may look at that and think, good Lord, that's
74, sorry, Bonnie.
74, that's steep, but actually the return on the investment is really good. So it's important that they do understand how to do the numbers, because the numbers will give them the clarity on what the deal is.
Exactly. And we safeguard as much as we can every step of the way. So we ensure that the GDV That's the end value of the property after the refurb is going to be what we say it's going to be. We ensure the rental rates are there. We make sure the refurb figure is booked in and locked in so that there's no surprises along the way. And you actually get paid a couple times with a HMO. This strategy is called HMO BRR. So it's a HMO and it's also a buy, refurbish, refinance. So you get paid because you're increasing the actual value of the property, and then you get paid twice because of the actual cash flow that this property produces. And obviously you get paid a third time by capital appreciation over the years, as with any property.
Mm-hmm. Brilliant. Perfect. Thank you.
Thanks, Bonnie. Now, our projects so far, so we've done 22 projects and counting, but I'm just going to focus in on one here. It's a little favorite of ours. This is called Project Top. It was a 6-bedroom HMO in Bolton, Manchester. That's where the other example was, also in Bolton, Manchester. So some figures here. Our purchase was 120,000. Our refurb was 73,000 on this particular one for a 6-bed all-ensuite HMO. The GDV on this one was 250,000. The cash flow per month, 1,700. The return on investment is 48%. So it's quite a sizable return on investment, as you can appreciate. So these are some quick shots of what it looked like before and during the actual rip out of the property. It was a 2-bedroom terrace, guys. It was completely derelict, abandoned. It hadn't been lived in for a while, so we had to rip it all out completely, refigure the whole thing. And this is what she looked like after. So we'd gone in and done a full rewire gas, the whole works, and decorated the property. Now, Bonnie, should I jump straight into the deals?
Yes, please, Dean. I'm excited to see what you've got, because as we mentioned, we chatted on the phone before jumping into the Deal Clinic Live. These are really new, so they're not uploaded onto Dean's website in the platform just yet. So Dean's going to present them here from his laptop, and then they'll be available on the platform through his website on Sourcing Investments. Thank you, Dean.
Thanks, Bonnie. So they are just hot. They're hot off the press. These ones are ready to go. Now, these are they're 2 good deals. So one of the deals is in good deals. They're my deals, so I have to say that. But they're quite rare. We don't always find deals like this, so they are a little bit exceptional, if I don't say so myself, and they don't always come around. But they do from time to time, as now. So one of the first one is actually in Wigan. So Wigan is in Greater Manchester. It's a town, a very large town, actually the largest in Greater Manchester. 4.83% price increase in the last 12 months. 6 billion worth of investment expected by 2024, and it's got Manchester's biggest population outside of the city.
Dean, can I just jump in very quickly? We've had 2 questions. One from Tom. Welcome, Tom. Tom's asked, is the potential rental row for a month or a year?
So there was both of them were covered there. So I'll skip back so Tom can see quickly himself. But in the columns, you actually had, for this one here, you can see you've got profit per month is 845, and then the annual profit is 10,142.
Beautiful. Thank you so much, Tom. I hope that helps. Thanks, Dean.
No problem. So this particular deal here, it's in Wigan, WN6. It's a 5-bedroom HMO, and you're looking at a purchase price of 87,000. We're looking at a refurb of 56,956 pounds. The GDV, that's the gross domestic value once a property is finished, is 177,840, and a cash flow per annum on the new interest rates of 6.5% is 6,357 pounds. Now I want to go through each of these just briefly. So starting with the refurb of 56,956 pounds. Our refurbs, guys, are based as accurately as we can do them. So we factor in absolutely everything, and we also have a 10% contingency factored in there as well. So with this particular property, you can see it's not in the worst position, but as we are going in and creating 5 ensuite bedrooms, there is still a little bit of work to do. So that includes a new electrical system, a new gas system, 5 en suites. With HMOs, you also need to meet certain fire regulations with fire doors, fireboarding, smoke alarms, and things like that. Also, full decoration throughout the property. That's new painting, that's new flooring, new carpets and laminate throughout, as well as any other bits and pieces like window replacement and stuff like that that we need to take care of. So our refurbs are very thorough, and we include everything in there. The GDV of the property is based on, now our GDVs, we don't just pull a figure out of the air and come up with that. They are based on a methodology after speaking to many surveyors. And again, Bruce is the expert on this, so he's the one to ask the tough questions to. But we work with a lot of valuation surveyors, and they all work very different, but at the same, they use quite similar valuations, and they'll base it off a yield rate. So they'll base it off the total annual income of the property over a set period of years. Now, this figure here, again, we can do this due diligence before you actually get in the deal to ensure that you're going to have this GDV, so that you're not crossing your fingers and hoping you do before while going into the deal. And then the cash flow there is based conservatively on some very conservative rental room rates of $430 per room for this area of Wigan. That's our first deal. Any questions as well, please fire away as we are going.
Yeah, that's great. Thank you so much for that, Dean. What I would like to do is actually bring in, if that's okay, bring in Bruce, because as you've mentioned, Bruce is he's really good at what he does. In fact, he's great at what he does. Bund Finance Limited, a completely independent broker with access to the whole market, as I've mentioned before, and they're dedicated to finding their clients the best deals out there. And I think it's important to come to Bruce now while you're talking about this deal, Dean, so that we can just get an insight on HMOs from a lending perspective. Bruce?
Okay. Hi everybody. Yeah, Dean, really nice deals, great figures, and great presentation so far. When you're looking at these sort of deals, you're going to have to use some sort of refurbishment finance to purchase the property. Then you're looking to get the work done, and prior to actually finishing the property, there's certain things I'd advise you to line up, like getting together your HMO license application, so that when the work's been finished, you can get the HMO officer around ASAP and get that application in. All the figures here look very reasonable. Good purchase price, good fair refurb price, and the NGDV looks good to me. Unfortunately, the pricing has gone up because there has been a bit of a backlog with a lot of the specialist lenders in the marketplace, and we are looking at higher interest rates this quarter, but I do expect them to come down once the backlogs are cleared. Bonnie, is there any questions you'd like me to answer?
We don't have any questions from any of the intent of the viewers and the investors attending at the moment, Bruce. But I think I would like to ask a question here with regards to particularly looking from an investor's perspective and engaging in a HMO and looking to purchase a HMO. What kind of nuances would they need to consider when looking for lending or financing?
Good question. You need to get all your costings up front, because you need to know what your finance costs are and put it into your funding model, so you see how much money is left in the deal. The biggest pillar on any refurb is time. You want to get in and out as quickly as possible to maximize your profits, because the longer the development takes, the longer that expensive funding you're on. So you want to get in and out as quickly as possible. So yeah, that's the reason why I talk about getting things lined up, like the HMO license application in as soon as it's finished, so that we can get off the expensive funding as quickly as possible.
That's brilliant. Thank you so much. Thank you for that, Dean. So I'd just like to remind the investors that are viewing live, if you have any questions, please feel free to drop those into the chat box or the Q&A box. Unfortunately, we can't see when you raise hands. So if you can drop those questions or queries into the chat box and the Q&A box, I'll be able to answer those there for you or direct them to the most appropriate panelist. If you're watching on replay, please do, as mentioned, use hashtag replay and email us at admin@sourcinginvestments.co.uk. Dean, back to yourself. Thank you.
Thank you, Bonnie. Thanks, Bruce, for the information. So let's continue on to the second deal. So this one, well, it's actually on the greater, we call it Greater Liverpool, on the outskirts of Liverpool, but Liverpool's probably the best. It's quite a big city, and the effects and investment in Liverpool will no doubt ripple on to this town. The town's called St. Helens. But a little bit about Liverpool. Why Liverpool? So it's the biggest growth UK-wide in 2021. It has a student population over 58,000. Now you might be asking, sorry guys, it's my first week back, so my words are all over the place. But stay with me. You might be asking, what does a student population have to do with a city? Well, HMOs in particular, student populations are great because a lot of students, they live in HMOs. They share houses. So Liverpool's got a massive student population of just under 60,000. There's 52,300 businesses across the city, and there's city regeneration worth billions underway. So you've got Liverpool Docks, you've got up in Boodle, you've got tons of work that's going on in Liverpool. So Liverpool's not just a great football team, it's also a great city to invest in. Now, this particular deal here, as I mentioned, is in St. Helens. So it's a 5-bedroom HMO as well as the last one. You can see it's quite dated. It hasn't been changed since it was made, and it is in need of some TLC. So the purchase price on this particular deal is £65,000. So it's close. It's not a unicorn deal, but it's close to a unicorn deal, this one. So £65,000, cash preferred. The refurb on this one, to rip everything out, new gas, new electrics, some slight structural works, 5 en-suites in every room, is £63,164. The GDV, again, based on our methodology estimates, 170,430. And you've got a cash flow per annum on a 6.5% interest rate of 7,793. So I will just mention on the interest rates, I don't want to steer it too far because I'm not a broker, but you have, guys, HMOs with interest rates climbing. If you got a buy to let, all of a sudden it wipes out all your profit straight away with the interest rates increasing. One of the best strategies at the moment with increasing interest rates and then consequently decreasing house prices are HMOs, because you have enough juice in there, you have enough profit margin that your interest rates, although they increase, you've still got a healthy cash flow. Now, when them interest rates drop down, which Bruce mentioned they are due to do quite shortly, and I've heard that they will do in Q2, then all of a sudden your cash flow jumps straight back up, but you've bought the house for quite a low figure. So that's just a little bit of strategy advice at this current climate. But again, this property here, it's 5-bedroom, all en-suite HMO in a popular area of St. Helens. And you have a refurb. Essentially, you're going to be looking at a brand new house. Now, Bruce mentioned something that I just want to touch on quickly as well, is the turnaround time for your HMO. So that's your refurbishment, how long it takes to get in there and get it done, whether you work with us at Parata Property or whether there's other agents that you work with. Ensure that you have a scope of works done up and you have a budget outlined that you can't veer from, because a lot of builders like to add extras in and increase the budget as they go. But number 2 is probably a bit more important, is make sure that you've got a timeline of when the works are due to be finished, because things can drag out. You need to have that identified from the outset to ensure that you are going to get it in and then out, especially if you're on what Bruce was mentioning before, bridging finance, which can be quite expensive. That's us there, Bonnie. We've got Q&A if there's questions and anything like that, but I'll hand it back over to you.
Yeah, we do have questions for you, Dean. So I've got June here. So thank you, June, for your question. We've got two actually from her. When decorating a HMO, what interior should you do, especially if your exit plan is to sell it later?
Yeah, so what we recommend, and I know not every sourcer that does HMOs recommends this, but we recommend doing the whole property to essentially make it bulletproof, because you want an investment that you're not going to have to worry about, that you can leave for the next 10 years, and you're not going to have to worry about changing the boiler or mold coming through the walls or anything like that. But in terms specifically of that question, June, decoration, we always recommend going with what is, I guess, in line with the area. So for example, you're going to have more expensive areas and you're going to have not so expensive areas. Every area has a ceiling, so you don't want to overspend in a certain area where your rental capacity is going to be capped. So you want to be able to know what that area is, and then do the highest spec for that particular area to ensure that you're going to attract the best tenants for the longest period of time. I'm just going to slide back here to the picture so you can get a bit of a view for our kind of spec that we do. We make sure that our properties are attractive and done properly. So I don't know if you can see that. Can you see that there, those pictures?
Yeah, brilliant. And she's also asked, Dean, what colours should you use?
Again, go with some neutral colors but attractive. But again, June, it's completely like, we will always go with what's going to market and what's going to be attractive. But if the client wants to have their own say on the colors and those types of things, then we're open to that as well. But neutral colors that are attractive, that are going to be reach a wide variety of tenant types so that you can fill the rooms quite quickly. And that are also modern and not dated. You go through so many HMOs and they've got that ugly magnolia on the walls, and it's terrible and it's depressing to look at. So you want to be fresh and make the rooms pop.
Oh my goodness, you reminded me of something. Okay, so magnolia, the color of the choice of the 80s and the 90s, I think. So just with regards to what Dean's just mentioned there, June, mutual or neutral, should I say, neutral colors, and then a pop of color with the soft furnishings. So soft furnishings can bring the color, make it really modern, and those are things that you can change that won't impact greatly on expenses, should I say. So thank you for that, Dean. She actually has another question. June's question's coming in thick and fast for you. When doing an investor's report, what items should be included in the report, and what items are extremely important for investors and should not be missed? And I think maybe both yourself from an agent's perspective, and I can bring in Bruce later with regards to lending on that.
Yeah, so when doing an investor's report, I'm going to assume in terms of looking at the deal and whether the deal stacks. Bonnie, is that do you think what we're talking about here?
I think so here.
Yeah. So you want to look at a few things really. You want to look at the area for a HMO. Is the area going to be attractive for tenants? Has the person providing the HMO sourcing the deal, have they got a proven track record to be able to deliver on the project, on what they've said? And then if you're looking to refinance, you need to ensure that your end value, your GDV, is going to line up. Otherwise, you could be out of pocket a lot of money. But the most important one, in my opinion, after working in this industry for quite a lot of time, is ensuring that you are, that the people that you're working with are trustworthy.
Brilliant. I agree. Okay, perfect. Thank you so much for that, Dean. Bruce, can I bring you in, because you actually do have some great product with regards to HMOs, don't you? You've actually sourced product that would actually suit overseas investors for HMOs.
Yes. So I'm just going to jump in and just share some slides, Dean, of what the products which are available for overseas nationals or expats. It's not really for UK nationals. I've got other products for that. These are specifically designed for expats. So let me just jump in, but I'm going to go straight to the products. And right, if you are an overseas national, we'll be using together money for the purchase if the debt is less than 100,000. They can fund up to 75% to first-time buyers. There's no minimum income, and the minimum loan is 30,000, and they're quite quick. A lot of lenders in the marketplace have got appalling service standards. So I do like Together. You do not need a credit footprint in the UK, but you are looking at rates just over 1% currently, with a 2% arrangement fee. Then on the exit, HTB are not back in the marketplace properly, and the service standards are atrocious. I'm doing a lot with Octopus currently for 6-bed HMOs or less. The interest rate is 7.7% fixed for 2 years. And then after 2 years, you can remortgage, and with your credit footprint and with your landlord experience, you get much, much lower rates. I'm expecting Hampshire Trust Bank to come back into the market. I reckon March, they'll be definitely back in the market, maybe February. And I've had chats with them. They've increased their rates artificially high to 8%. Hopefully, they're going to be back down to 6.5% in February, March. So I would expect exit funding with HTB back in the place. But currently, if you ask me right now, Octopus has got the best product in the marketplace for a first-time HMO landlord. If you are a second-time HMO landlord, Quantum have got a very good 2-year discounted tracker rate at 75%. It will be 3.5% is Bank of England currently. They've got a product which is 3% just over that, so interest rates just over 6.5%. And the nice thing about Quantum is they've got a switch and fixed option. So when the fixed rates start coming down, you can switch onto a fixed rate, and there's no extra fees. So literally, you go from a tracker to a fixed rate. Any of their products, 2, 5, or 7-year products, that allow you to do it free of charge whenever you want, if you've got that credit footprint. So it just shows you, once you build up that credit footprint, you're gonna take the hit on the first deal, but the second or third deal, there's a lot more options available to you. And I also do like Quantum because, Dean, they instruct VAS, and VAS is a commercial panel lender, and you're going to get a commercial yield-based assessment of the property. And that's it. That's just the products I wanted to talk about, because Bonnie shared them with me, that they're both HMO refurbs, and I thought we need to let the clients know you've got to go in with some sort of bridging finance, and then you're exiting to 1 or 2 products depending on what your experience is.
That's great. Thank you so much, Bruce. I do have a couple of questions from our viewers, but I've seen Tim has had his hand up for a while. Apologies, Tim. Yeah, go for it.
No worries. I'm just I'm enjoying listening to all of this. So just a quick one with the question about the interiors and what to do with them. One of my recommendations would definitely be to get hardware and carpets. Spending a little bit more on a thicker, harder quality carpet, especially in something like an HMO where you've got big foot traffic, going in between tenancy sort of renovations and things like a lick of paint or fixing a few niggles. A carpet is something that can last a long time if you get a good one to begin with. So along with that, I would say a sort of dark grey sort of kind of colour, which will help hide stains. But that's something I've definitely experienced. It's been worth me spending an extra little bit at the beginning, so that the foot traffic, especially if you're doing something with people going in and out in a particular hallway, or if you're doing a serviced accommodation kind of idea as well, something like that will be very beneficial.
That's brilliant. Thank you so much, because that was going to be the question. So thank you for answering that, Tim. And did you have any questions with regards to Dean's deals today? Because normally you get really excited with the deals that are presented. So I just wanted to hear what your thoughts were around those.
Yeah, I mean the numbers look brilliant. The numbers are absolutely amazing. So definitely in terms of the purchase price, they're lovely and low, which is great. Obviously, then that in terms of getting finance products and stuff, that does change the sort of game a little bit. But for me, when I've done things around this price range, I've used investor funds to purchase to start with, mainly because I've had issues in the past with supply chains. For one of them specifically was Windows. I had a long delay with a new set of Windows that were coming that delayed me about 3 or 4 months. And so for that one, it wasn't a problem because I had investor funds, which I was using. But if I was doing a bridging loan or if I was bridging that part, I would have made sure I got at least an extra sort of 4, 5, 6 months on the term, just in case for that. I think Bruce probably can go into more detail on that one, but that's been my experience, especially sort of coming out of COVID and with the backlog of everything that seems to be at the moment. Generally, things on that nature have taken a little bit longer for me. But no, the numbers look great. There's a lot of maneuverability in terms of the profits for the higher interest rates at the moment, which is great. And definitely the areas, St Helens is a good area to be looking at as well at the moment, as Dina said. So yeah, I really like these.
That's brilliant. Thank you so much, Tim. And we have a couple of questions still from the viewers, but I'd just like to go to Bruce first with regards to lending on that, Bruce.
Yeah, so my top tip was, if you were going to buy for cash, is to still get a valuation done, provide the valuer with Dean's detailed schedule of works and his comparables for the rental in the area, and still get an GDV valuation, just for peace of mind, even if you are a cash buyer. Okay, so if you're not using bridging, please get an independent valuation done, just for your own peace of mind.
That's brilliant. Thank you so much for that, Bruce. And actually, when you were going through your own presentation there, you mentioned, I think it was Octopus. Apologies. Yeah. I think you mentioned Octopus, and that it's easier on the second and third as you go through the journey as an investor with HMOs. Do they lend to investors who have HMO track records, or should I say, do they lend to investors who have had no investing history at all, or do they only lend to investors who have got that proven track record?
Yeah, so I put Octopus up there for the first-time HMO landlords. Octopus are a great lender. You just need a little bit of income in the background and own your own home, and don't live in a corrupt country. And they will lend to you. Okay, so Singapore is fine, Hong Kong, but some of the countries I don't really want to mention where the corruption is high, they will shy away from that. But it's only a 2-year deal, but it allows you to earn your credit stripes and to get your landlord experience up. And then once you've got that, we can go to the likes of Quantum, we can go to the likes of HTB, which have got much better rates. Unfortunately, they've got massive backlogs and they've artificially increased their rates to stop the new business coming in. Apparently HTB are down to their last 700 applications, and they should clear that by the end of February. Once they clear that, they're going to have to start lending again. And those rates are going to have to come back down. So even though I'm quoting 7.7 now, by the time, Dean, how long was a typical refurb for these properties?
So we'd say a 5 to 6 bed would be 3 to 4 months.
3 to 4 months. So if we have an investor here who's interested in one of Dean's, at the time he buys it, that's going to be the end of February. Yeah. Time we've actually done the whole refurb, 4 to 3 months, you're in May, June, July. It's going to be a completely different mortgage market then. Its trouble is I don't have a crystal ball. I can only show what the rates are currently. But with UK swap rates not going as high as they are, they've actually started coming down. The lenders' rates will start coming down.
That's brilliant. That's great to know. Thank you so much for that, Bruce. Really appreciate that. And you mentioned there, you know, new investors interested in HMOs. I just want to come to Lachlan, because Lachlan, when we spoke last, really with regards to your experience as a new UK investor, because obviously you've invested in us in Australia. As a UK investor, you are now looking, or interested at least, in HMOs. Have you learned anything through today's show?
Yeah, I'd take Bruce's handy hint of getting that GDV in early and have a bit of peace of mind, because I won't lie, there's been some stressful times, but it comes along with the journey. Yeah, Dean's always got good spots. So I like when he pulls up the statistics as well on, you know, students here and development here. And I think we can all follow here in Australia as well. You see a big freeway coming in, you know, buy next to it, and it's probably going to go up pretty soon. So things like that, yeah, good to see and hear.
That's great. And also, I think from an investor's perspective, if you could just share very briefly your journey, because it wasn't, sometimes we go into investing thinking, yeah, 3 months and I'm done. That was really not your, because you got caught in the backlog, didn't you, with surveying and things that just slowed the process down, right?
Yeah, my first deal I had fell through after it was not under contract, whatever the word is, for about 6 months. And then, yeah, lucky I met Dean after that. And I think it was the start of January, Dean, was it somewhere around there? And it just went through in the end of August. So yeah, renovation done now. So the whole process all up has taken a year. There was a bit of a backlog. And if there's one thing not to skimp out on, it's the solicitor. That's my advice for the day.
Absolutely. And also for me, as somebody watching the journey from the outside, you know, and seeing one of our own investors, you know, trained investors, I really want to just touch on the fact that your patience was so good to stay in the game. You know, we do touch on mindset, as you mentioned, and that was really key, wasn't it, for you to stay in the game in order to, you know, otherwise you could have pulled out very, very easily. And then not had, you know, as you mentioned, the profits are going to be better than what we anticipated. But you could have pulled out. So what was that like? Just if you could briefly touch on that.
There was a few tricky parts where there was, like, as an example, the papers here that get signed, they have to actually go over to the UK. So that could take a couple of weeks to up to a month, really, to get that paperwork signed over. But there was the ups and downs and a few things where it's like, well, you know, what am I going to do here? And that's kind of where you got to come back on your support, which was Dean, who's awesome. My mentor, Anthony, he's awesome. And the other thing I forgot to mention is with the training is mine was in a group. So I had the group to go to as well, other mentees. So I could go to them. Wendy Tang, I think she's actually watching now. She's awesome. She actually helped me with that deal as well. So yeah, I'd say all the additional support, it's really needed. And without it, it'd make it a lot harder than it was. No,
thank you for that. And it's really crucial that you mentioned that, because the environment, no matter what we go into, whether it be investing or anything else as an entrepreneur, environment is really key, isn't it? And so I'm really glad that you mentioned that, because it keeps you in the game and it lets you, it's a great reminder to know that you're on the right track and what you're doing is actually the right step. So I'm glad that you stayed in it.
Yeah, thanks, Bonnie.
Okay, so gents, nearly done. We've got a few more minutes and there are 2 questions that are still outstanding. So Dean, I think you may be able to answer this. It's an anonymous attendee. So they've asked, is it viable to do HMOs in London where the property price is way too high?
Yeah, it definitely is. There's a lot of people that do HMOs in London. Again, you've kind of answered the question there yourself. The property price is a lot higher, and obviously the rent goes up because it's London, but it doesn't go up, you know, what's the word, in conjunction with the actual amount that the property price goes up with, compared to the north of England, Manchester in particular, where, you know, the property prices, as you've seen, there's houses there for £65,000, and the rooms you're going to get, you know, 400. So it is definitely doable, and a lot of people do it, but I don't think that the yields are as high there or close to it.
Thank you so much. Thank you for answering that, Dean. I've got another question for you, Dean, but I just want to come to Bruce with regards to that. I think, Bruce, you've got your hand up for that.
Yeah, I totally agree with Dean. You're going to get much better uplifts on value and be able to recycle a lot more money, basically because the purchase price is a lot lower and you're driving the value up. And if you definitely zones 1 to 5, I wouldn't really be doing HMOs in London. Some people still do it, they make a success of it. But if you're looking to get a good ROI, I would look Croydon, Bromley, more the outskirts of London, where the prices are that little bit lower. So you can drive that price up by increasing the room density.
Yeah, that's a really good point there that you mentioned, Bruce. And also, you know, having lived in London myself, just going out slightly extra into a higher zone, so 5 and 6, the price points are slightly lower, but the rental demand is still there. And remember that the transport in London is incredibly connected. So there's, you know, the overground, the underground, you've got the usual trains, and you can get in very quickly into central just using that. So it's something to consider. But really what I'd like to say to the investor that asked that question is it's really key to find a strong sourcing agent in that environment that particularly has London. And London is such a huge city that you know what part of London you really want to invest in, and that they understand those nuances in those locations, because one street can be so very different to the next street. So please do find an agent that is able to give you the returns that you are looking for if you really do want to invest in London itself. Last question is from Janet, and this I think is directly for yourself, Dean. Do you source high-end HMOs as well as student ones, or is that in another area?
Yes, we do high-end HMOs as well, but again, we source, and our spec is relative to the area that we're in. So your higher end, you're probably going to want to be in, you know, areas like London or like maybe central Birmingham or even central Manchester. So some of those areas we don't necessarily work in, but we will always as well. We work with the client. So if the client wants to go for a higher end as well, we can do that. Student HMOs as well. Yes, we do them. Student HMOs, they are a little bit trickier because you have a higher turnover and students like to party, so you're going to get more wear and tear in your properties. But that just comes down to having an agent, you know, that vets everyone properly, that has deposits taken and stuff like that. So you just need to be sure that you're mitigating all your risk with students.
That's brilliant. Thank you so much. And yes, students, we do love them. You know, they are great. They are great for HMOs. And obviously there's a contract there because they tend to stay the year. So with that, I don't think we have any more questions, no more hands raised. So what I would like, Tim, go for it. Go on, last one, go ahead.
I've just noticed that Kanti's got her hand raised. I'm not sure whether there's the ability for her to unmute or what if there's a question there.
Yeah, so what we need to do is, Kanti, if I did message you, if you could kindly drop your question into the Q&A box or the chat box, and we'll be able to answer your question that way. If you're unable to write the question in the Q&A or chat box, please reach out to us at admin@sourcinginvestments.co.uk, and we'll happily take your question there and redirect that to Dean for you, or any of the panelists that are present. So whilst we wait for that, what I would like to do is, we've got, so also Wendy says, shout out to Lachlan and happy that the deal comes through. Kanti has actually asked, if I want to invest in one product, who should I contact for the investment? Kanti, I don't actually understand the question. If you could rewrite that would be brilliant. If I want to invest in one product, which product? Do you mean which property that Dean mentioned?
Property.
Is that what you
meant? I reckon it's property.
Yeah. So if you want to invest in one property, who should you contact? So I'm going to drop Dean's link into the chat box again for you. And I'm actually going to show you how to contact Dean now. Okay, bear with me 1 second, guys. I hope that's what you mean, Kanti. Okay, let me just add Dean's link into the page. Okay, Kanti, so I have actually dropped Dean's link. So that link will take you to registration page to register directly to Dean's landing page and website within the platform. And if you want to register to the whole platform, feel free to do so. Dean Canty has asked, he wants to invest in one of the properties. Okay, that's fine. Canty, I've just dropped Dean's link. If you click on that, you'll be able to register to Dean's website within the platform, and you'll be able to communicate with Dean from there. Okay, perfect. And now I'll be able to show you all actually how to connect with Dean. Okay, bear with me 1 second. My tech abilities, they do improve, I promise. Okay, so this is Dean's landing page. Okay, so as you can see, a whole wealth of properties in Dean's page here. Okay, so when you jump into Dean's page, you will be able to have, there's a click button here that will say chat with. You would be able to live chat with Dean. That doesn't mean to say that Dean pops up in a live chat button in a little bubble to talk with you directly right then, right there, but Dean will get a prompt to respond to you. And the same with bond finance. Once you have that there, you've got bond finances page here within the investors power team. This is Bruce here, and you can use the live chat button there as well with Bruce. And if you actually are completing or you are offering on a deal, you can add in the deal there with regards to the details. So that is everything there. Okay, I believe that's everything. So I would like to thank our attendees that we have had. So thank you to everybody that attended live. So Canty, Brett, Hemming, Hisham, James, Janet, Jen, Chris, Leroy, Mary, Sarah, Tom, and Wendy. Thank you for attending live. Really do appreciate you. And thank you to all the viewers that watch on the replay too. So with that, gentlemen, I wish you all a very good rest of your day or evening. For those of you that are calling in directly from Australia, thank you so much for gifting us your time and presence. And to all the viewers watching live and on the replay, we wish you all an amazing, prosperous 2023.